Guys, I got a question from somebody asking about commodities investing. Investing in commodities, when you think of commodities, think of oil, think of wheat, think of, soybeans and gold. And commodities just a thing. It's just an item. And it might be an item that we use in everyday life, like oil and wheat and those types of things, or it might be something that just sits there, like gold. In any case, we recommend against investing in commodities. Now, they're a real hot item right now because the actual growth in the price of commodities has been strong as of late. And the reason is because it's driven by supply and demand. It reminds me of a couple stories. One is thinking back to something in the 1600s called the tulip bulb craze. What happened, people were bidding up the price of tulip bulbs because they became the hot commodity. Now, we now looking back at that would say that's kind of silly. Why would you buy tulip bulbs? But they were a really, really important thing at that point in time. And what happened is the price kept getting bid up, and then finally what happened is they crashed like crazy. They went down precipitously. And I often call that the greater fool theory. And anytime I buy a commodity, what I'm hoping is that there's somebody out there that will pay a higher price than what I paid for it. And that's what I'm banking on in reality. Ken French, who is a professor, actually did his dissertation on commodities futures. And he basically said it's like betting on football. It's like investing in football bets. In other words, if I were to look at two people betting on a football game, investing in which one of them would win after the spread is kind of a silly thing because it's a zero-sum game. And as time goes on, you're going to end up losing. It's the dealer that ends up winning, and that's always been the case with commodities. People make tremendous money in commodities, but it's always the dealers that make all the money. Now, what a lot of financial people have been doing is adding them to investment portfolios as of late. Why? Because they know their clients are watching out there and seeing that they're going up in value. They've seen the rate of return on these things, and now they're demanding them. And I think that the advisor is becoming a salesperson when they give in to that. As a matter of fact, there are some fund companies that have come out with new commodities funds. And I remember actually watching a professor of finance when asked about why would they come out with this type of a fund? There's no real good reason, no rate of return reason to come out with something like that. The expected return after inflation is pretty much nothing historically with commodities. Well, one of the things he did is he looked down at the ground and he says, you know what? Demand. That's basically it. That's why fund companies come out with these things. So as far as commodities investing go, watch other people do it. Don't get involved with it yourself. And we'll catch you next time.